let's start with that lead we've got from offshore. Wall Street pretty lacklustre, not too much movement in Europe either. What will investors be weighing up at the open today?
Well, in terms of today, I think there's a lot of technical resistance just above where we are at the moment. Of course, Bradkin coming out with their earnings today, so that'll be quite interesting to see how they go. Obviously a very small weighting on the market, so it's not really going to have a huge implications. And of course the retailers will be very much in focus today, given JB Hi-Fi's good earnings yesterday and the blockbuster gains we saw there. Whether they're going to see some follow-through buying, I expect we probably will do, but technically it's getting a little bit overbought now. We've seen a 32% rally in the stock in the last 8 days, so perhaps it's a little bit time to lighten up after today's gains, or probably sort of midway through the session. You might see that taper off, but net business confidence may give some of those retailers, if we get a good number today, a bit more of a boost. So I think that's probably going to be the local factors. I think Japan's going to be very much in focus. Big gains coming through there. And I think in terms of the overnight lead, of course, everything was pretty stagnant. There was a little bit of a tapering off in some of the risk currencies. Aussie dollar, as you say, traded nicely down to, I think, about 102.62, and it looks like it's wanting to test those lows again. Euro dollar looks like it's sort of oscillating around that 134 level, and I think Mr. Weidman's comments last night that the euro isn't significantly overvalued were probably the big key why that came off the lows, and why we're starting to see continued inflows there at the expense of what we're seeing now with Cyprus, which seems to be the big talking point at G20, along with some of the horse products that they're knocking out in Europe at the moment, which will also be discussed. So yeah, some interesting moves, slightly risk off. We saw that in the bond market, but I think we'll see a positive open here in Australia. We're calling up about 13 points or so.
Yeah, Chris, talk us through the Cyprus bailout chatter and the implications for the global economy, because it's not a big nation.
No, but I think we're past the situation where we're talking about the size of nations. I remember the amount of people who were speaking about Greece being 2% of GDP, and how that could have limited implications on the euro, and we'll know how that story panned out. So it's not about the size of, it's about the contagion that can come, the lack of confidence that come through. Now Cyprus hasn't, we've been talking about potential bailouts here. The debt that's held on some of the banks there is about 8 times that of GDP in Cyprus. There's been a number of different situations that have been thrown around. I think the FT came out with an article yesterday, but it doesn't seem to be having the same sort of ramifications that we've been seeing with Greece, for example. I think possibly what could happen from a psychological perspective, and possibly why we saw Spanish and Italian yields sell off to the tune of about 6 basis points to the upside last night, is because what we saw with Greece with the private sector involvement, i.e. the debt write-offs we've seen there, were supposed to be a one-off. Now if we see a second nation coming off with a debt write-off, which is one of the implications that possibly could happen, then bond investors will be sitting there going, well, I thought Greece was supposed to be a one-off. We're now seeing that with Cyprus again. Who's next? And I think that's probably, from a psychological perspective, probably the implications that we're going to be seeing there. It will be discussed quite in large at the G20 summit over the next, at the back end of the week into the weekend. But I think, in terms of GDP, obviously it's a very small fish, and we know that the Europeans are doing everything they can to try and keep everyone in. I think they're also going to get a loan from Russia as well. It's not the size of the nation, we know that now. It's about the implications it can have into other nations and the ramifications it can have onto confidence and different bond markets.
And we know that currency wars are also going to be a topic for discussion at this G20 meeting later in the week. We've got France pretty concerned over the heights that the euro has been reaching, Germany not so much. How do you think that sort of chatter is going to pan out at that meeting in Russia?
Well, I think politicians should stay away from talking about currencies. I think it's not their job at the end of the day. I mean, you can make loose connections to it, but it's down to central bankers and central bank governors to talk about exchange rates. The French finance minister came out last night. We all know Mr. Hollande's been talking for the last couple of, for so long, saying that they should actually adopt a medium-term target, I suppose, for euro dollar, and he tried to rope in other nations last night. I think the Luxembourgians, the Dutch and the Austrians came out and said that they're not interested in anything like that, and so I think they've shied away from that side of things. I think what we're going to see, and it's been widely publicised now, is that we are going to see the G7 coming out prior to the G20 meeting with a joint issued statement trying to calm this currency war side of things. We haven't seen that statement yet, but we will see that by the end of the week, and that will try and calm nerves. We've even seen the US Treasury sector, one of the US Treasury guys, Mr. Brainard, coming out overnight, which has caused a bit of a pop in dollar yen, suggesting they've actually been working with the Japanese, and they're not too bothered by the moves we've seen the Japanese as well. So I think that's an interesting thing. And of course, the Japanese themselves on Friday came out Mr. Asso, who's prone to gaffes himself, basically talking down the strength in the yen, saying that it's weakened faster than he had expected, trying to appease the G20 as well. So I think there will be a calming of rhetoric going into that side of things. But I don't expect, I'd expect any kind of dips in euro dollar on the back of this, or euro yen, should we say, after G20 to be bought.
Yeah, and we've also got GDP out from Japan and not too far away. We've got them coming back online after a holiday yesterday. Tell us about how important these numbers are going to be.
Well, I think, let's look at the third quarter. We saw Japan going into that really deep contraction of 3.5%. We're actually expecting, or the market's expecting 0.4 for this flash GDP number. I think it comes out tomorrow. So that will be interesting. But I think the big implications for Japan are what happens on Friday and then going forward. Of course, we know Mr. Shirakawa stepped down earlier than thought. So I think the April 3rd and 4th meeting in Japan really becomes very, very key, because we're going to know who the big Bank of Japan candidate's going to be. Friday is the day that all the different candidates are going to come out, throw their names into the hat, and actually say, I want the job as the Bank of Japan governor, and then obviously there's going to be 2 deputies to stand in as well. Now, depending who it is, and there's 4 that I've seen which are the front runners for this, will depending on how dollar yen trades and how the Nikkei trades as well. So we're calling up the Nikkei up about 1.7%, which is really interesting considering its dollar yen's only modestly higher from where the cash closed on Friday, and actually S&P futures are only up about 0.4%. So we're expecting good gains there. So a number of people, of course, Mr. Abe, the comments that Mr. Abe may choose a less radical member caused a bit of a sell-off on Friday, and that would be a guy called Toshiro Mutu, who's actually said that the Japanese yen strength isn't a concern. So if he gets the job, you probably see dollar yen coming off. You're probably going to see the Nikkei coming off as well. But in terms of people holding Nikkei positions, futures positions, or dollar yen positions, there's a guy called Mr. Awara, and he's considered the biggest yen bear, and I think he wants to see radical measures being taken place. So I'm looking for him to come in, hopefully, and continue this move higher. So I think Friday's going to be the interesting day for Nikkei holders and for dollar yen traders as well, because I think that's when we're going to see all the candidates coming in who are potentially going to come in and replace Mr. Shirakawa at the top of the Bank of Japan and implement these radical policies which are so needed to get to 2% inflation.
Chris, just finally, we're all kind of on 5,000 watch here at Sky News Business, 4,959. That's where we sit right now. Do you think we'll reach 5,000 this week?
No, I mean, it's difficult. Of course, we're going to have to see some blockbuster earnings from CBA. I think on Friday as well, what we've got to know is, on Monday, I know it's not answering question. Monday, 19 points of fair value comes out of the market because there's so many companies paying dividends, so that's going to take the market down a bit as well. So CBA tomorrow, the big one, they're going to have to justify it. Of course, we're looking for a number of different factors, and it's not just the cash earnings we're looking for at 3.98 billion. Dividend at 162, but it's going to set the precedence for the whole of the banking space as well. Net interest margins, what's the trends in return on equity, what's their cost to income ratio like as well. And if they disappoint, you may see the stock coming off from a capital perspective. Of course, everyone's buying it for its dividend. It goes ex on Monday, so that's potentially where you might see different price action. But I think big technical resistance to the upside. You've got the the April 2011 high at 49.76. I think we just tested that and couldn't close above it yesterday. You've got the 50% retracement of the all-time high down to the GFC low at 49.86. Again, that's a level we need to close above. And then you've got the psychological 5,000. So my best guess is it's going to be tough going, and we will need to see a blockbuster number from CBA to try and push us through that level.
Okay, here's hoping. Chris Weston from IG, thanks for checking in with us.